Hello everyone, welcome back to my YouTube channel. Today we are discussing the latest developments surrounding the Vietnamese dong and the Iraqi dinar, two currencies that continue to capture the attention of global investors, currency speculators, and economic analysts due to their unique positions against the US dollar and their ties to broader macroeconomic and geopolitical trends. As we move deeper into 2026, both Vietnam and Iraq are navigating complex economic environments shaped by global inflation pressures, shifting trade dynamics, and domestic reform agendas. The exchange rates of the Vietnamese dong and the Iraqi dinar against the US dollar remain central to understanding not only their economic trajectories, but also the sentiment surrounding potential revaluation narratives that continue to circulate, especially among retail investors. Starting with Vietnam, the Vietnamese dong has maintained a relatively stable but controlled depreciation trend against the US dollar. The State Bank of Vietnam has continued its policy of managed float, allowing gradual adjustments while preventing sharp volatility. This approach reflects Vietnam's export-driven economy, where a slightly weaker currency supports competitiveness in global markets, particularly in manufacturing and electronics exports. Over the past year, Vietnam has seen strong foreign direct investment inflows, especially as multinational companies diversify supply chains away from China. This structural shift has strengthened the long-term outlook for the Vietnamese economy. Yet it has also created pressure points. On one hand, increased capital inflows support the currency. On the other, rising imports and external debt obligations require careful currency management. The dong's exchange rate against the US dollar has hovered within a controlled band, reflecting the central bank's intervention strategies. Analysts note that while there is no immediate indication of a sharp revaluation, the fundamentals of the Vietnamese economy, steady GDP growth, strong export performance, and a growing middle class provide a foundation for gradual currency appreciation over the long term. However, it is important to separate realistic economic projections from speculative narratives. The idea of a sudden, massive revaluation of the Vietnamese dong, often discussed in online communities, does not align with current monetary policy frameworks or Vietnam's export-oriented strategy. A rapid appreciation would harm export competitiveness, which remains the backbone of the country's economic growth. Turning to Iraq, the situation surrounding the Iraqi dinar is significantly different and far more complex. Iraq's economy is heavily dependent on oil revenues, making the dinar highly sensitive to fluctuations in global oil prices. In recent months, oil prices have experienced moderate volatility, influenced by geopolitical tensions, production adjustments by OPEC, and shifting global demand patterns. The Central Bank of Iraq has maintained a relatively stable official exchange rate of the dinar against the US dollar, while parallel market rates have occasionally diverged due to demand pressures and regulatory factors. Efforts to stabilize the currency have included tighter controls on dollar auctions and measures aimed at reducing money laundering and capital flight. One of the most discussed topics among dinar watchers is the possibility of a revaluation. While speculation continues, economic experts emphasize that any significant change in the dinar's value would require substantial structural reforms. These include diversifying the economy beyond oil, strengthening the banking sector, improving governance, and enhancing transparency in financial systems. Recent developments indicate that Iraq is making gradual progress in some of these areas. Government initiatives aimed at modernizing the banking infrastructure, digitizing financial transactions, and attracting foreign investment are steps in the right direction. Additionally, agreements with international financial institutions have provided technical support and guidance for economic reform. Despite these positive signs, challenges remain. Political instability, corruption concerns, and reliance on oil revenues continue to limit the pace of economic transformation. As a result, while incremental adjustments to the exchange rate are possible, a sudden and dramatic revaluation remains unlikely in the near term based on current fundamentals. Comparing the two currencies, the Vietnamese dong represents a controlled, export-driven model, with steady growth and gradual policy adjustment, whereas the Iraqi dinar reflects a resource-dependent economy undergoing a slower and more uncertain reform process. Both currencies are managed rather than freely floating, meaning their exchange rates are heavily influenced by central bank policies rather than pure market forces. From a global perspective, the strength of the US dollar continues to play a critical role in shaping the exchange rates of both currencies. The dollar has remained resilient due to relatively strong economic performance in the United States and higher interest rates compared to many other economies. This has created upward pressure on the dollar, making it more challenging for emerging market currencies to appreciate significantly. For Vietnam, a strong dollar means maintaining a delicate balance between supporting exports and controlling inflation. For Iraq, it means ensuring sufficient dollar liquidity in the domestic market to stabilize the dinar and meet import needs. In both cases, central bank interventions are key to managing these dynamics. Investor sentiment toward these currencies varies widely. Institutional investors typically view the Vietnamese dong as a stable long-term play tied to economic growth, while the Iraqi dinar is often associated with speculative investment driven by the hope of revaluation. This divergence highlights the importance of understanding underlying economic fundamentals rather than relying solely on market rumors or hype. Another important factor influencing both currencies is global trade. Vietnam's integration into international trade agreements, such as regional partnerships in Asia, has strengthened its position as a manufacturing hub. This has increased demand for the dong in trade settlements, indirectly supporting its values. In contrast, Iraq's trade dynamics are more concentrated, with oil exports dominating its revenue streams. Efforts to diversify exports and expand non-oil sectors are ongoing, but will take time to significantly impact the currency's strength. Inflation is another critical variable. Vietnam has managed to keep inflation relatively under control, which supports currency stability. Iraq, on the other hand, has faced periodic inflationary pressures due to fiscal spending and exchange rate fluctuations in the parallel market. Controlling inflation remains essential for maintaining confidence in the dinar. Looking ahead, the trajectory of both currencies will depend on a combination of domestic policies and global economic conditions. For Vietnam, continued investment inflows, export growth, and stable monetary policies are likely to support gradual appreciation or stability of the dong. For Iraq, the pace of economic reform, political stability, and oil market conditions will be decisive factors. It is also worth noting the psychological aspect of currency markets. Expectations and perceptions can influence behavior, especially in speculative environments. The narratives surrounding both the Vietnamese dong and the Iraqi dinar have been amplified by online communities, sometimes leading to unrealistic expectations. A grounded, data-driven approach is essential for understanding the true potential of these currencies. In conclusion, the latest developments show that both the Vietnamese dong and the Iraqi dinar are navigating complex but distinct economic landscapes. The dong continues to reflect steady growth and controlled policy management, while the dinar remains tied to broader structural reforms and oil market dynamics. Against the US dollar, both currencies face challenges, but also opportunities shaped by global trends and domestic strategies. For viewers and investors, the key takeaway is to focus on fundamentals, policy direction, and realistic timelines rather than speculative hype. Currency movements, especially in emerging markets, are typically gradual and influenced by a wide range of factors that evolve over time. As always, we will continue to monitor these developments closely and bring you the most accurate and up-to-date analysis. Stay tuned for more insights and make sure to subscribe to the channel for the latest updates on global currencies, economic trends, and financial news.